Thanks so much for joining into today's Talking Point. I'm Neeraj Shah, and our guest today to talk about life beyond 20,000 is Saurabh Mukherjea. He doesn't quite like talking about what's going to happen here, now, today, tomorrow, in the next 1 month. But we're going to, because it's a momentous occasion, we will kind of invoke some of that conversation as well. Saurabh, excuse me, but just the nature of the moment kind of, necessitates that to start off, because it's a heady level. A lot of people think about it, and off late in the last 2 or 3 odd weeks, sort of a lot of conversation and skepticism around what's happening in the mid caps, small caps. There was a Kotak note which said that we are taking away recommendations on all mid caps because we can't justify the kind of rally. How are you looking at this?
I think, look, it's a story which has some warranted optimism in it. I think you're right to say that this deserves celebration. Given where we were as a country 3.5 years ago in the height of COVID, even 2 years ago, right, the second wave of COVID, given the amount of pain the country took, I think we should celebrate the recovery from COVID, both not just the stock market, the economic recovery, and India's resurgence as a major global economy. Where I think a degree of caution is warranted is a lot of the rally in especially PSU type stocks, both directly PSU stocks, government-owned companies, and companies which benefit from government order flow. I find that a little crazy, I have to be honest. For the life of me, I can't understand why people are getting so worked up, so excited by PSUs and orders in sectors like railways and defense. These sorts of rallies in both public sector names and government capex are rarely sustainable. So that's where I think a degree of caution is warranted. Sectors like IT, like financial services, broad-based consumption, these are themes we ourselves at Marcellus have championed for a long time. And I don't see valuations there being a particular concern. For example, high-quality financial services companies, I don't think we have a valuation bubble there. But PSUs and government spending-related names, I am a little fearful about what's happening there.
Everybody tries to think about not just for the next 3 months, but what happens to markets after such a heady level, such valuations, and at a point of time when India has done so well, when the rest of the world necessarily hasn't. I mean, Nasdaq is also a very narrow rally in that sense. I heard you mention that there is warranted optimism for such a kind of a move. Do you believe in the continuation of the kind of growth that we have shown thus far, and the kind of participation that both domestic and global money is making into India to continue as well? How do you look at it from that prism?
So let me pick off the easy part to that question, Neeraj. The easy part to that is, will there be more global money coming to India? I think absolutely. I don't think there's any doubt. I spent the most of last week in London talking to our clients in the UK, and met several new clients who I think will enter the Indian markets. And similarly, the news from North America, where we are seeing pension fund inflows coming into Marcellus, and further ongoing university endowment inflows coming into Marcellus. I think all of that suggests to me that there will be sustained foreign inflows over the next few years, especially given the dire state that China's economy finds itself in. Let me then move to the next easier part of your question, which is, can the rally in high quality names in our country sustain? So, for example, if you look at, say, high quality lenders, say Bajaj Finance, a Kotak Bank, and HDFC Bank, I neither find their valuation particularly demanding at this juncture, nor do I have that much doubt that high quality lenders in India, these three lenders, say you can add an HDFC Life if you want to broaden the piece to life insurance, add an ICICI Lombard if you want to broaden it to general insurance. I don't think growing at, say, 20% EPS, 20% EPS growth will be particularly challenging for lenders and life insurers and general insurers of this quality. So that's another big pocket of spending. Similarly, IT services, I don't think the big Indian IT services companies will struggle with 50% rupee compounding, rupee EPS growth in the coming years. There's, I think, plenty of business coming towards India for the Indian IT services companies for AI and cloud. So massive pockets of prosperity in the Indian stock market, big financial services names, big IT services names. Similarly, say in pharma name like Divi's Lab, I think the visibility that's increasingly growing is as API spending shifts from API procurement shifts from China to India, Divi should be a major beneficiary. I stress all of these names are parts of Marcellus's portfolio. I am an investor in Marcellus's portfolio, so are my parents, and obviously Marcellus's clients. If you ask me where do I see challenges in the Indian market in the years ahead, I see challenges in the PSU space. I see challenges in the whole government-related spending place, and that's where, as I said a few minutes back, Neeraj, I think that's where valuations have got a bit out of hand. I think the last 3-4 years of sustained defense spending, railway spending, infrastructure spending has led to a boom in spending in this space, and I think a lot of stock market investors are extrapolating that into the years ahead without, I think, quite having justifiable reasons for doing so.
But just wondering, Saurabh, if you don't play the B2G theme, or if you don't play the PSU theme, which is essentially benefiting from the government contracts, currently the capex largely is being funded on the government side. There are sure pockets of private capex as well, but they are not meaningful, right? So how else do you play manufacturing, for example, if you don't bet on companies which are benefiting from government capex?
So I agree with you. I think capex in India has been a very tricky thing to play ever since the country liberalized in 1991. Capex has been a tricky thing to play. We had I think a 3-year capex boom in the mid 90s, 94 to 97, and then we had a say 5 or 6 year capex boom, 2004 through to 2010. Right. So capex booms in India tend to be short. They tend to be fairly sharp and brutal. The ending tends to be quite brutal, and I agree with you. It's difficult to see how to play capex in India, and it's something that we have struggled in Marcellus for a long time. But just because you've struggled doesn't mean you dive headlong into government-driven capex plays, especially given that you can see that the fiscal deficit is punchy. Remember, we're still not back to 2019 pre-COVID levels of fiscal deficit are still substantially below where the government is today. So there will be fiscal consolidation, I think, inevitable after the next election. I don't know when the next election is, neither do I know the degree of consolidation that the government will have to push through. But it's not clear to me that this rate of government expenditure growth on defense, on infrastructure, on railways is sustainable given India's fiscal position. Remember also that in the current fiscal, there's been degree of tapering off in government revenue collection. Right, last year was superb. This year so far, direct tax revenue collection hasn't been as sharp as it was last year. That also warrants a degree of I think somberness in considering the B2G theme. So just because capex is something that if people want to play, it doesn't mean you go headlong into themes which are not quite sustainable. To my mind, I'm thinking of it the reverse way. IT services undemanding valuations, high quality financial services undemanding valuations, top quality pharma names such as Divi's undemanding valuations. And my suggestion to our clients is load up on those. You're not going to get these sorts of valuations on names like HDFC Bank, Divi's, or PCS for too many years to come.
I'm sure you've thought it through. I would love to understand how you guys have thought about the recent bout of relative underperformance, if I can use that term. Actually, you can even argue absolute underperformance, but relative underperformance in some of those high quality financials, sort of, because their commentary around growth seems to be okay. There doesn't seem to be too many issues. Their ratios vis-a-vis some of the others which have performed are also strong. Somehow the market is not rewarding them. Like, what does that tell you?
So the reason is simple. No, the market is saying they will buy. The market is buying PSU financial services names, not just say a reputed PSU like State Bank of India, but even say if you go down the PSU bank curve, even names like UCO Bank and Bank of Maharashtra are having stellar rallies. The market is saying we don't want HDFC Bank. We want to invest in Bank of Maharashtra and UCO Bank. And the market's verdict is clear there for everybody to see. I would rather invest my money, my parents' money, and our clients' money in HDFC Bank. I've seen financial services, worked in financial services in 2 different continents, and I've seen how financial services rallies end. I lived in India through the whole. I remember the Yes Bank rally through 2008 through to 2018. I saw DHFL rally in the 2013 to 18 bull market for financial services, and I've seen how abruptly financial services rallies and low quality names end. So you're right. The market is saying that we don't care for Kotak Bank or HDFC Bank. We would rather buy UCO Bank or Bank of Maharashtra. The folks at Marcellus is saying we would rather stick to Kotak Bank and and HDFC Bank.
Saurabh, what do you tell yourself when you see these slightly longer bouts of underperformance in the high quality names, which I mean, on a normal basis?
I enjoy it, Neeraj. I can't tell you how much I enjoy it. It's what makes this job a lot of fun. So you see the same mistakes in country after country, decade after decade. Just that the mistakes come back in a different avatar. In the previous financial services bull run, the mistakes were in the form of investors backing low quality names such as the then Yes Bank and say DHFL. This time around, the mistakes are in the form of investors backing public sector lenders whose long-term track record leaves much to be desired. But it's the same mistakes. The same mistakes, they play out in different avatars in different countries. And that's what makes this job so interesting. It makes the job so much fun.
Okay. A word on a couple of these global factors that are high frequency everybody talks about. One is what could happen to rates and thereby risk assets. Two, what could China do and thereby the impact on flows into China or into metals. Do you ponder over that, and how do you look at them?
So look, in terms of what could China do, I think if you ask me, the one challenge around this whole G20 summit was both China's belligerent attitude towards America, generally China's hostile attitude towards India. The Chinese premier not attending the G20 summit really was a signal from the Chinese about their displeasure about how the world is treating them. And I worry about this. I worry about how China will retaliate against both America and India in the months and years to come. So I think that's something we need to look at quite carefully. I don't think we can just say China plus one will, yes, that will lead to benefits for us. We in Marcellus will benefit, for example, if Divi's lab gets more API business. But we also have to keep the big picture in mind that a major global economy is unraveling in front of us. And I think there are likely to be a broader fallout for America and India around that. And unfortunately, we're not defense experts or geopolitical experts to be able to piece together exactly how China will retaliate against the West and against India for what's panning out. The broader piece around interest rates I find quite encouraging. My reading is, by and large, inflation seems to have topped out both in the Western world and in India. It's not going down to 3% anytime soon from the looks of it, but provided inflation doesn't go back above towards that 9% number, it's difficult to see why the Fed or indeed the RBI will hike again. And therefore, with inflation having peaked, rates look to have peaked. If rates have peaked, then this is a great time to buy top quality financial services companies.
Got it. So before we wrap up, you give us some very interesting events / things that are happening in the country. The last time at the event, you spoke about this mega facility at Hosur, which I didn't know of, a lot of people didn't know of. From there until now, some water has gone under the bridge. Anything else that it stood out for you in terms of a marquee development that has happened in the country, or two?
So I think the South India's economic boom, I think, is something that hasn't been written and spoken about enough. So the whole electronic manufactured services piece, the whole API specialty chemicals boom, this really has been concentrated around, say, the area around Chennai, the area around Hyderabad, and the area around Bangalore, Hosur, as we just mentioned, right? It's an incredible boom. So, for example, if you look at the government data, Telangana's per capita income has doubled in the last 5 years. And the result is several South Indian stocks that we are discovering where the price points at which these South Indian companies are charging their customers, they're nearly second world, in some cases first world price points. So, for example, we've recently built a large position in Rainbow Hospitals. This is Hyderabad headquartered company, 17 maternity care and pediatric care hospitals across South India. But a typical child delivery, maternity care delivery in Rainbow Hospitals costs around 2.5 lakhs. But in South India, because of the boom and because of the high quality jobs that are there, 2 lakhs for child delivery is an affordable price point. The result is obviously a very high profitability hospital chain. I think ROC, return on capital, is north of 40%, and therefore we've become in the recent months happy shareholders in Rainbow Hospitals, and looking forward to see this sort of prosperity spilling out from the north towards Western India. From what we are hearing, Rainbow plans to expand in the area around Mumbai, Pune, and I think they're also expanding in Gurgaon. So this is hopefully this is a foretaste of things to come. South India, I think, is a glimpse of the future. Hardworking, successful Indian couples going and spending large sums of money and allowing people like us to benefit from that through our investments in these companies.
I expected none less a gem of an anecdote. Thank you so much, Saurabh. But thanks for joining in today and giving us some sense of how you're thinking about life beyond 20K. Really, really appreciate your time today.